weekend all. Ira Epstein with your SPDR ETF stock market wrap-up. This is your weekend edition. We're going to look at weekly charts, and this is Sunday, the 17th of November, 2024. Now, what I wanted to do this weekend, and I did it, is I wanted to go back and look on a seasonal basis what happens post-election 30 trading days out. So from the election, do we just go up? Do we come down? Where do we go with the market, and how do we do that? So what I did is I did a special report on the S&P, and I throw in another index in there for you to look at. The idea here is for you to see some key dates, and they're coming up at you. So I go through them in great detail. The charting service that I use for this, for just the seasonals, we're not going to look at charts of the S&P. We're not going to do that. We're looking at one thing and one thing only. How has this market looked over basically a 100-year period, a 50-year period, a 25, a 15, the Biden election? I walk you through all these scenarios, and they all come down to one point in time. And that's what I want you to see. Number two, I've worked out a deal that if you want to try this, the application, let's call it, I've made it where you can get a free trial to it through us. And I've also gotten the company that has it to offer you a discount should you decide you even want to buy it after trying it free for a while. Can't do any more than that for you. So you go to iraepstein.com. You'll see on the top left of the page, Stock Index Report. Give it a click. At the end of it, it's all laid out there for you. Enjoy it. It's all about momentum. Got that? That's what it's about. All right. So let's go now and take a look at what we have. You were down in all the stock indices as a whole, all right, coming in this week. It's been a rough week, a rough 2 weeks for the market, in fact. And it didn't help when the Fed chair came out this week and said they're in no rush to cut interest rates. It's not a race. They'll do it at their pace. Nobody's quite certain of what the neutral rate is. That has come out crystal clear from everything I'm seeing. We have seen that the Fed admits the labor market is stronger than they thought. You do remember 2 months ago they were very concerned about labor. Now, the adjective that the Fed chair used was remarkably strong. And we've seen PPI, CPI numbers that have come in and shown that inflation is basically not dropping. It's leveled off, a little bounces here and there. And Fed member after Fed member this week that came into the market made that statement. It's not an easy road. It's the last part that's the difficult part. There is no race to this, and they're still data dependent, forward looking, but data dependent. Okay. But that doesn't mean that you can't go back in history to see what the markets have done. And like anything, when you go back to old charts and you look at them, you cannot take from that even though it shows this happening, that past performance is a guarantee of future performance. It doesn't work that way. If it did, we'd all be billionaires, all right? But I like it. And I like to use it because once the chart action goes with it, I've got another one of the tools that is saying, make that move. When you and I look at the S&P, we see the correction is set in finally. So we were down this past week, 2% in the market. When you look at the swing line, you still have a pattern of higher lows and higher highs, bullish. You have support in the market. It was 564, but remember, that number is going to jump. And it's jumping at the tune of approximately $1.50 or so in recent times, $1.50, $2. So it's probably going to get closer to the 566 level when the market reopens first thing in the morning. The resistance, 636. Each time you've been hitting these Bollinger Bands, you have been correcting. You don't have to believe it. I get wise guys that always write about it, but I'm telling you, that has been what the play has been, and momentum is still embedded. So until the red line closes under 79, I think on these breaks, you're going to get people coming into the market and buying on the breaks, throwing in the towel possibly if at the end of the week you lose the embedded reading, but not until then. Amazon went up to the upper Bollinger Band, and as I said last week, I seriously doubt you're going to get new buying up there. I think the pros are going to take some money off the table. It is what I think. so far. I'm looking for support at 185.08. Is the market lost its ability to embed? Both numbers finished up over 80. Both numbers last week, this is November 8th, were over 80, not the week before. This is the week that can determine if it embeds. In K-Web, this is the Chinese shares. They're still coming down. I'm still looking for them down here until China says and does something with what they say that the market buys into, that they're really making big changes. The moves they've made in the property market and so on are not adequate for the market to buy into that. Internally, it's better. You are seeing some house movement. You are seeing some buying going on, but there's all that property to absorb. You've got to bring more into the market. So the moves they've made have definitely been constructive, but obviously not enough to turn the market back yet. MCHI is going right with it. You can see this, higher high, lower low. Maybe it comes down here to look for the support. Restoration Hardware, just like all the others that are counting on the consumer. Well, number one, the consumer is strong, but I don't know that they're going in and doing massive redecoration of homes, Restoration Hardware. If they're running to Home Depot to do big projects right now, I question that in a big way. And you're seeing that weigh on the market because interest rates are still relatively high. Higher high, lower low, but the bias is up as the market's been able to hang in over that 18-week average. In Meta, you're getting a correction. Lower highs, lower lows, you lost the bullish reading. I think the market will go at a minimum this week down to that 18-week average. I'm wrong. Got to have a spot where you're wrong. If it hits 599.67 first, barring that with the outside day, the lost momentum, I think that's where it could easily go. KRE, why is this so strong? Well, again tonight, if you look at the futures market, and I did about 15 minutes ago, futures are lower, which means real interest rates are still climbing. And as they climb, the spread that the regional banks can make, taking in money, what am I going to pay you? But what can I lend money for and make it? That spread's pretty good. Yes, these people have exposure to commercial real estate. Yes, commercial real estate's not out of the woods, but you start paying attention here. 57.64 to 57.86. You're liable to get the 18-week average crossing the 200 right now. It's not a death cross, not any of those type of moves that you get one way or the other, but it is another crossover of moving averages, and traders will watch that, and they will get friendly if that occurs. In XLI, the market keeps hitting the upper band and backing off. Now, you don't go short at upper bands. It's a question of what do? You had an embedded reading. So when you hit it and you're embedded, and that's what you've been doing since you've been embedded, traders take off some of their positions. They bail, in my opinion, when the red line closes under 79. But this is a weekly chart. So you've got to go a whole week to know if that's going to happen. In XLE, each time you hit this band, yes, during the week when you first hit it, that's where I think traders take money off the table. The energy sector is made up of what? These are the refineries. These are the people that make money without the drilling per se, and they are part of the drilling companies that do it, but not the oil companies that are doing the actual drilling. Trump is very pro. Remember what he said, drill, baby, drill, 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 drill. And that kicked that up. The dollar on fire. I mean, the markets just love the programs that President-elect Trump is bringing in. The dollar probably gets a little bit of a bid tonight on the fact that President Biden today said that now Ukraine can use longer range missiles and go after Russia because Russia's using Korean troops. Russia's amassed a lot of soldiers there. Russia has been effectively taking out the electric system in Ukraine as winter's now approaching. So they see that. The idea here is probably to give enough damage where Ukraine can do for President Trump to step in and see if he can get a peace negotiation going. In the gold market, back down to the 100 I'm sorry, the 18-week moving average of closes, lost the embedded reading. I didn't think gold was going to break that much. I thought gold would hold up off the Ukraine situation. I expected on the missiles this to occur. I thought it would prop the market, and I thought inflation readings would do it. I was wrong. So market down there, it stepped out of its uptrend. And copper, I've been dead right. I said, don't believe anything China's saying. Watch the markets. They'll tell you what's going on, and the markets aren't buying into it. Now, come December, there's another meeting of these committees within China. That may be where things happen if, and there's the word if prices continue to drop. Look for the 100, the lower Bollinger Band, and the 200-day average right in here to be the supportive zone. Again, I want to remind you, go take a look at that report that I've got for you. You might want to learn how to use seasonals. You get free trial with all this from the company. You're going to need our link to get all this. So you go in and you'll see special report at iraepstein.com. It's in bright green in the top left. Look at it. From there, sign up on our website with the free research that you get, and you will see Season X is now in there. I'm Ira. You have yourself a great evening. I'll catch up with everybody come Monday morning. Take care now.